Hey everyone, this is Jodi Satkunam. I am the founder of Level Up Investments. I've been investing in real estate for over 20 years and specialize in multifamily investing. We have investment opportunities that are available typically on a quarterly basis. And if you're interested in learning more, click the link below, set up a 30-minute call with us. So ever since I was in junior high, I always had this goal to retire early. And so when I got my first professional job, I started putting as much as I could away into my 401k. And every time I would get a raise, all of that raise would go into my 401k until I had maxed it out. So it took a few years to build up to maxing out my 401k, but I never took a raise until after I had maxed it out. And then I just continued maxing out my 401k, and I was doing well. Like I was doing the calculations, predicting, how much money I would have at retirement, and was I on track, and felt comfortable with that. I was on a walk one day, and I was thinking, I'm really excited because I have been saving, and I really want to retire early. And then I had this realization that I can't just take my money out of my 401k whenever I want, right? And I wanted to retire before 59 and a half, which is when you can typically draw from your 401k without any penalties. And so then I thought, shoot, now I have a problem, because if I want to retire, let's say at 50, I have a decade that I need to fund before I can pull from my retirement accounts. And so that was kind of a light bulb moment for me, where I went, okay, I need to solve this and figure out how I can retire early and fund that period of time until I can draw from my retirement accounts.
Before you found the real estate, or real estate came into the picture, who are you professionally, and what did being good with money kind of look like for you?
That's a great question. So I'm a CPA, and I worked in the banking industry for 20 years. And so I was very close to understanding how finances worked, and was very tight on planning out my finances. I tend to live frugally. I don't need a lot of stuff. I more prefer experiences. And so as I was working in financial services and banking, I was around many people that they were doing very well, and so I could see like what that looked like as I was planning for my future and the financial picture that I wanted to create.
What were you investing in, or what were you focused towards, like as far as saving for that retirement before real estate?
Yeah, so it was 100% focused on my 401k and just putting money in my 401k. Of course, I had my emergency fund if something happened, and I would dabble in the stock market. But when we had the tech bubble burst, I got in right before the tech bubble. So when there was all the hype, and then it burst, and I lost over 50% of the money that I had invested. And that was my moment where I went, maybe I shouldn't be choosing the investments. Maybe I should give it to someone else to choose where I should be investing, because it wasn't the great return that I had expected.
Yeah.
But I was young. I didn't know any better at the time. And so that was a good lesson for me.
When you finally ran the numbers, what specifically made you say, like, this traditional plan doesn't make sense? Was it specifically like the age requirement, or was there something else that you were like, all right, 401k is not the option anymore?
Yeah, so it really was based on timing. And the primary driver was that I wanted to retire early, and I was locking up all of my funds in a 401k. Now, I had a company that we had started, and so we were a decade into building this company as well. And operating companies kick off cash flow, which is great. And I was looking for, how can I continue to build my wealth without me actively doing things, without me actively working, right? The average millionaire has 7 streams of income. And so as I kind of stepped back and reflected on that, I really sat back and went, okay, what streams of income do I have? I have my W-2, I have my tech company that we owned, and that was it, right? And so real estate was really that next play to start building out my real estate portfolio, because real estate cash flows decent and it also grows your net wealth. And so that's where I really decided real estate is where I want to go. The biggest reason for landing on real estate versus the many other options are that there are many tax advantages to real estate. And so because I was doing all right in my day job, the last thing I wanted to do was add more taxes to my tax return every year and really not be growing my wealth at the pace that I wanted, because I'm paying it out in taxes. And so there's that balance of how you structure your investments, whether they're tax-free, tax advantage, or taxable, right? And so it's kind of looking at how you're making those investments.
Can you walk us through like that first deal, like what it looked like and the process that you went through in making that transition from your traditional plan to stepping into real estate?
Absolutely. So my first investment purchase for real estate, I had purchased 2 office properties prior to that. And really the purpose for buying those properties were for our business. So my first investment purchase was an industrial space. We had warehouses and it was 10,000 square feet. There were 5 warehouses and 1 office. And it was scary. The first time you buy a property as an investor, you put your projections together, you anticipate how much rent is going to grow, what your expenses are going to be. And honestly, you have rose-colored glasses on, because nothing ever goes how you expect on your first investment. However, we did really well. We bought the property. It was in West Fargo. And our first mistake that we made was the rents were substantially under market rate. So what do? We raised all the rents. Well, we raised them a bit too quick. I want to say, if not all of our renters non-renewed, maybe 1 stayed, right? And so we went from having a full property to it not cash flowing at all. And we had to refill the property. And so as you learn and as you buy more properties, like there's always lessons learned, but it ended up being a fantastic property and is doing great today. We subsequently had sold it probably 3 or 4 years ago, and we did well on the exit, and I still stay in touch with the current owner and he's doing fantastic. So I would say buying your first investment property is scary because it's the first, but over time you get more comfortable and you learn through every investment. And so now as I go into properties, I'm very good at projecting what those expenses are going to be running, what the rents will be in the future, and taking a slower pace to increase rents. We're doing fantastic on one of our properties right now where we have slowly been increasing rents over the past few years, and our vacancy rate is very, very low, which that provides the return and the cash flow, right? You need to keep your units full. And so yeah, that was our one and only industrial investment. We've subsequently transitioned into multifamily, but it was a fantastic investment for us and a nice exit.
Would you say that do you think you would have kept investing in real estate if that deal hadn't been maybe as successful as it was?
That's a great question. I'm the type of personality that I typically will just work hard to figure it out. But that doesn't mean that you can always figure out everything, right? And so, yeah, I don't know if I would have or not. Like I said, I had purchased 2 office properties previous to that, and they did really well. So based on that, I probably still would have continued. It may have been a different trajectory or even slower, right? Because as you buy properties, you start to layer them because you buy a property, it does well. Now you have more cash coming in that you can look at buying more properties, right? And so it's kind of a snowball effect over time as you invest. But yeah, that's a great question.
What was the turning point or the point, at least for you, where you were like, okay, I'm gonna go all in this real estate route? Did you forget about the 401k and kind of just all go towards real estate, or what was that decision look like?
That's an interesting question because yes, I actually stopped putting money in my 401k a few years ago. And so now it just rides, and I haven't been adding to my 401k for many years. And it really was that moment where this is an interesting story. So one of my investors, after he had invested with me, I had asked him, I said, well, why did you invest with me? Because it was my first deal where I brought investors in. I had been investing my own money for many years. And I had known him because he was doing some work on our properties over the years. And he looked at me and he goes, Jodi, winners win. And I didn't really know how to take that. And I just kind of said thank you and just kind of lodged it back there, right? And then about a year ago, I ended up being at a competition, and I brought home 3 golds in Olympic weightlifting. And that quote came back to me again: winners win, right? And I realized at that moment that I do a really good job of figuring things out. Throughout my entire career, I've been put in situations where I didn't have the answers. I was building new things, whether it was companies, departments, strategies, and I just figured it out. And so that was kind of the moment where I went, I always win when I bet on myself. I can build a life that is what I want with freedom and flexibility. And I don't have that when I'm working 60, 70 hours for my employer. And so that kind of was that moment where I went, it's time to bet on myself. And so then I went deep into getting my hands on any book that I could around real estate investing, around tax strategies, around structuring investment so that it's a win for investors as well as operators. I attended many conferences and became enrolled in masterminds and really put myself in situations where I was with people who were years ahead of me and had a lot of experience. And so that's been really the past few years. I've just been going deep in learning as much as I can so that as I bring opportunities to investors, I feel very comfortable that they can trust that we've done our due diligence and this is a good investment. Because at the end of the day, trust and my reputation means more than any investment that we do. And so I've underwritten a lot of properties and I've said no to a lot of properties, but I'd rather say no and not bring opportunities to investors than bring bad opportunities to investors.
How does your real estate portfolio compare now to your 401k? Like as far as the return or like the retirement strategy?
So the return is substantially more than my 401k, and it surpassed my 401k because in real estate, I was actually running some numbers on one of our investments where a handful of investors invested with me, and over a 10-year period, they will 5x their money. And I actually had to pause and run the numbers a couple times because you know the rule of sevens, right? So you should expect to double your money in 7 years. Well, this is a 10-year hold and they're going to 5x their money. If we hit the pro forma says that we'll be around a 17% return. And for the first few years of this investment, they've received 20.5% return. So based on that trajectory, they're going to more than 5x their return. And part of that is, you know, we're not paying taxes as we have the cash flow, you know, it's not taxable. There's a taxable event at the end when we sell, unless we sell and 1031 it into another purchase. So 1031 is just a tax strategy that allows you to roll an investment into the next investment without paying taxes. So there's many different strategies. The government loves supporting real estate investment, and so the tax code is written in a way that there are many ways to take advantage of that as an investor. So yeah, my real estate portfolio is growing much quicker than my 401k.
For someone listening to this who is doing all the right things, they're investing in their 401k, but they want to retire early. What are like the first 2 to 3 moves you would tell them to make, maybe within like the next 30 days?
I would say educate yourself. So there's many different things that you can invest in, many different investment vehicles. So I would say as you explore the different investment vehicles, explore those that fit your risk appetite, your return appetite, and those that you feel most comfortable with. I also, when I started, I was very hands-on. I did everything myself in all of my properties. I did all the renovations, and you can take that route, for example, or you can invest with someone and not put in the time and effort, and have that freedom of time, rely on a solid operator. It's key to be comfortable with an operator if you're investing money with someone else, to look at their track record and understand how they invest. And so I would say the biggest thing is educate yourself, and then find who you want to work with, or if you want to do it yourself, to do the investing.
You're one of the operators yourself, right? If somebody who's watching this wants to invest in real estate, but wants to take that route where they don't necessarily have to gain all the experience you have, maybe they just want to almost ride off your coattails or invest in deals that you're investing in, how can they find you, and how can they start that journey?
Yeah, so they can find us on social media or hit our website. On our website, they can submit their information. They can schedule a 30-minute call with me, and I'm happy to learn more about them, what their investment objectives are, and what they're looking to accomplish. What is their risk appetite, essentially. But book a 30-minute call with me, and we can share what we're working on, what's coming up, and if it's a fit for them. Really, I like talking to people when we don't have an investment on the table. It just allows us to have a conversation, get to know each other, and then we plan to have investment opportunities every quarter. And so that way people can be planning and also see what types of deals that we do.